Boom! What's going on, guys? Michael here, 360 Digital Closing Bell. Daily Energy Market Summary, episode number 139 here on this gorgeous Friday, October 10th, 2020. As always, I am your humble correspondent, Michael Darren, coming to us from an undisclosed location here in Denver, Colorado. Taking today's Friday show, a little solo show. Stu had to slip out and do some stuff, so I will be covering everything on the international news desk today. We've got some also crazy stuff going on the U.S. shale. Past Schlumberger drops earnings. Gulfport Energy enters forbearance. U.S. rig count was up 13. It also looks like Parsley CEO comes out and takes a stand on the Texas Railroad Commission. We'll cover all of that. Plus, I'll get to the international news desk. But first, guys, just subscribe. 360 Digital Closing Bell, iTunes, Spotify, YouTube. The best way to stay up to date on all of your energy market news. When we look at the overall markets, how they fared today, it was fairly flat. I mean, everything was up about a half a percentage points. September retail sales came out this morning's trader reacted to that. Actually, some pretty strong numbers. Actually, analysts expected about 0.7 in terms of an increase in retail sales. Retail sales actually jumped 1.9, which is really good to see. Also on the Dow Jones side, why that was up a little bit. Europeans' top aviation regulator came out and said that the Boeing 737 MAX is safe to fly again. That sent Boeing shares rising about 5 percentage points. So good day on the equities markets. When we move over into the crude oil markets, stayed relatively flat. Excuse me, currently trading around about 40.83 times days, as you can see above me, about 121 here as we move into that afternoon session. So it's about depending on where you start your day, it's about it's about a quarter of a percentage point down or up, again, depending on how you play that back end of the curve. 0.2 percentage points, 42.99. That's about, like I said, a quarter of a percentage on the downside. So differential splitting on that. Natural gas takes a nosedive today after Cameron and Sabine LNG facilities show pretty much full feed gas capacity coming back. Natural gas currently about $2.70 even. That's 2.5 percentage points on the downside. Natural gas on the 12-month strip stayed fairly flat, though actually up a half a percentage point, $3.05. So again, differentials just continuing to split. XOP was our E&P securities contract, down 2.8 percentage points. OIH was the oilfield services, was down 4.5 percentage points. We look at our biggest movers on the equity side. Downside, Delk Energy Holdings, they were down 7.5 percentage points. Of course, Gulfport Energy is going to be down 7.5 percentage points, down to 27 cents. Sanchez Midstream Partners, up, down. Today, finally down 11 percentage points, 68 cents. Again, a lot of this stuff has to do with what's going on with Mesquite Energy, their upstream main service provider. On the international side, I guarantee Stu would have run a couple things here. First, Saudi Aramco, and I'm going to get this international oil company right. ADNOC. I don't even know what honestly that is. Abu Dhabi National Oil Company. Excuse me. This is why I can't be running the international news desk here. But the Abu Dhabi National Oil Company and Saudi Aramco came out and are investing $44 billion in a West Coast refinery petrochemical facility. The chairman of the project came out and said it's actually also being sponsored by the Bharat Petroleum Corporation and the Hindu-Asian Petroleum Company. It's 60 million tons of refining capacity that's supposed to come from the Marshetta Coast. India currently has their oil refining capacity of about 225 per annum. So this is going to basically about increase them by about 25%. Good for India getting themselves in on some extremely low cost fuel. Another thing is we covered back in June, BP announced they were laying off about 15% of its workforce. Well, they announced today about 7,500 of them are going to actually be compulsory redundancies, which means you're getting laid off. About 2,500 staff members to make up that 10,000, which they were looking to lay off, actually took took of those eligible voluntary severance, according to an internal memo that's actually obtained by Reuters. To give you an idea, for every year you were there, you got about 1 month severance. So it'll be interesting to see how these other ones. As you remember, guys, Bernard Looney, CEO, has promised to cut 40% of its oil and gas production by the end of this decade, which is a pretty radical pledge for an oil company as he seeks to go ahead and, as he really seeks to shift BP into a renewables production, specifically offshore wind and solar. So they're losing about, like I said, 2,500 people in terms of took those compensatory, because about 500 of those were executives, thinning out that executive branch. Always a fan of that. The last thing this industry needs is more VPs. Even though I'd love to be one, if anyone wants to hire me to be one, I'd gladly take the title and the pay. But I do think there's just too many of them. But about 7,500 of those are going to be unfortunate layoffs, so not good on that. So it looks like it's going to be coming out of London and Houston, most likely, but there's some other international ones, Trinidad and Tobago, that they're going to go ahead and cut from. Also, part of why, this didn't really affect oil today, but I think it's pretty interesting. When OPEC meets every month, they do what's called stress tests. They think about what's the worst and best case scenario, both on the oil and both on the demand and supply side. This was the first time they've actually, I met yesterday, first time in a couple meetings they've actually, implemented a stress test on a second wave virus that would lead to an oil surplus in 21. Generally, they're not talking about a second wave or a second wave of lockdowns, but today they didn't. It was basically calling for about 2 million in cuts if that came to be. So to give you an idea, they're doing about 8.9 million barrels right now. They would look to bring that down somewhere in that 6 to 7 range, but it'd be interesting to see. As we know, OPEC's cheating all the time, so it's pretty hard to figure out what they're going to do. One of the biggest quote was, in particular, resurgence of COVID-19 cases across the world and prospects for partial lockdowns in the coming winter months could compound the risks that are already on. Again, their deficit of 1.9 million barrels on average to anything where 2.7. So that's where that 2 million barrel cut kind of comes into. When we move over to the U.S. shale patch, there's a couple things. First, let's bang off the big one. That was Schlumberger dropped earnings today. As you know, Oilfield Services generally announces their earnings first, and Schlumberger is generally the mover that comes out first. And to be honest with you, more of the same for some. They say continuing to get hit on their North American business. We already knew they were going to take a big hit selling most of their business over to Liberty, but now we get an idea, guys. They come out, do not have a good day. 16 cents earnings per share. It beat expectations of 13 cents, but they only had but their revenue slightly missed expectation, only about $5 billion. What's happening though is their revenue is shifting completely from United States over to international. To give you an idea, a year ago, they were 33 percentage points. 2 years ago, they were 48% North American versus international. Well, now they're only 22% based on their latest revenue numbers. And considering, again, they're selling their one-stim business over to Liberty. Oh, my goodness, guys. They are just going to continue to get pounded. The markets didn't like it. They're traded down about 8.5 percentage points at this point. That again, the revenue, I look at that, revenue from North America specifically plunged 59 percentage points in the quarter and makes up, as I mentioned, 22%. They're going to continue to, probably shift and set itself up to be just basically a completely international. I kind of see them abandoning the United States market. If you're going to get out of the U.S. fracking business, that's really about, first, no one's going to be drilling when oil comes back. They're just going to be fracking all of these ducks. So I think it's a sign of the times to come. As in, Schlumberger sees this as a nice exit. I still do like that deal for Liberty, though, but it'll be interesting to see how all of that plays out. Gulfport Energy, a smaller offshore provider, missed their interest payment today. I don't think this was as much a surprise to many people. They skipped their $17.3 million bond payment, entering a 30-day grace period. Here at Oil and Gas, we expect them to announce Chapter 11 restructuring fairly shortly. This was their credit facility was cut from $700 million on October 8th down to $580 million, which puts them pretty much tapped out on any type of liquidity. So it'll be very interesting to see what happens there. And by interesting, I mean we'll just see when they decide to declare bankruptcy, because I don't think they're quite going anywhere. On the brighter side, U.S. rig count was up 13, and this is not a joke. It was up 13. I kind of saw this number and I kind of like, what is going on here? I think that's a little much, but in terms of what's going on in the patch, if you're a drilling operator or someone looking for a job, great to see. At least someone spending some cash here. To give you an idea, Canada had no rigs on an increase, still about 80 on there. To give you a basin breakdown, Eagle Ford saw an increase of 3. The DJ Niobrara came in at 2, so some people in Denver getting some stuff in there. So I'd highly recommend you checking out all of this rig count data. Go to oilandgas360.com. You can find it at the homepage, Entercom Analytics. Hit the drop down. All of our dashboards are available there. I would ask Stu if we missed anything, but unfortunately he's not here. I don't think we missed anything. This is just a really long week. I think as we move forward, this weekend will be very interesting. I highly recommend checking out our podcast, which is available exclusively on YouTube, episode number 56, where we kind of dive into everything that happened this week. But I think with this, guys, I'm going to go ahead and let you get out of here, give you a hall pass, and start your weekend early. Thank you guys for checking us out on the world's greatest website, oilandgas360.com. For Stuart Turley, I'm Michael Tanner. Thank you for checking us out. We will see you guys Monday morning for our Week Ahead podcast, and in the afternoon for our digital ticker.